a lot of these brokerages have come out with a note that suggests a stronger 2026 for Indian markets. Now, the consensus is tilting towards domestic sectors over exporters. Mahima joins us over here to give us more perspective on what are these brokerage notes expecting from the second half of FY26. Mahima, a lot of notes that we are seeing, and focus has remained that 2026 is expected to be a stronger year than 2025. Just give us a perspective in terms of what are these notes essentially highlighting.
Right, so Anushi, 4 different notes coming in from 4 different brokerages. I'll start with Morgan Stanley, which is a Rhythm Desai note. The note says that they see Indian equities regaining their mojo in 2026. 2026 is likely to be macro trade in terms of stock, a transition from a stock picking environment. 13% upside in BSE Sensex through December 2026 is what they're expecting. Domestic cyclicals over defensive and external facing factors is something that they'll be keeping an eye out on and will be their picks. In terms of overweight, they're overweight on financials, consumer discretionary as well as industrials, underweight on energy, materials, utilities as well as healthcare. The next one is Jefferies India, which is a Mahesh Nandurkar note. September quarter earnings showed a sequential uptick growth after 4 quarters of decline. He's saying that early festive season driving revenue growth to a 10-quarter high. Sustainability of GST-driven consumption uptick is a key strong earning trajectory to watch out for. And MSCI India earnings growth at FY26 is at 10% now. Citi India strategy note by Surendra Goyal, Q2 slightly ahead of estimates is what the note says, and revision trajectory is stabilizing. Sustenance is the key from here on is what the note is saying. Festive season demand saw an uptick, but remains to be seen in terms of where momentum sustains or not. Update on US-India trade deal and confidence on return to double-digit earnings trajectory in FY27 remains the key, and relative valuations look reasonable right now as of September 26. A Nifty target is at 27,600 according to them. The last one is JP Morgan India strategy note by Rajiv Batra. Q2 witnessed a better than expected quarter. They are anticipating accelerated double-digit growth in second half of FY26 as well as FY27. Reiterated preferences over, they prefer domestics over exporters, and like metals, materials, financials, consumer, hospitals, real estate, defense and power. So these are the strategy notes that have come out in the morning so far.